So if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. And basically, how did I make $1,122 trading Google put options? So on April 28th, 1552, I bought Google put options. So 1552, 428. Yeah, so 428. And I look at all my trades on the 30-minute time chart. So 428, 1452, did I say? Or 1552, okay. 1552, which is not this one, but this candle right here. So basically, I bought Google put options as soon as it approached the 20-day moving average, and basically the next day I sold out the position at 9:33, and so within the morning candle of the opening market of Google, I sold out the position. I made an easy gain of $1,122 trading Google put options. So basically the game plan was let's see, if I recall, I think I looked at it on the 4-hour time chart, but let me see if I can remember this trade in my head. Okay, I remember exactly why. Okay, so basically on the 30-minute time chart, right, I saw that, okay, let's see, 428. So basically on the 30-minute time chart on April 28th, I bought Google put options as soon as it approached the 20-day moving average, right? And when I switched to the 4-hour time chart, right, you can see that since the wait. Yeah, so basically on the 4-hour time chart, I looked on the the long-term trend of Google. So I was like, okay, let me see, where is Google heading towards? Is it heading in a, is it looking that, is it in a downtrend? Is it an uptrend, right? So basically on the 1330 candle on the 4-hour time chart, basically Google tried breaking above the 9-day moving average, right? But it completely got rejected by it. It started going under the 9-day moving average. You can see basically it tried breaking the 9-day moving average, failed. It tried to hold itself on the 20-day moving average, failed, and then it just went below it. And so when this candle right here, the 16 candle, you can see that it tried somewhat approaching the 20-day moving average, but it looks like it's, slightly got rejected by it, sort of. But you can kind of see the pattern here, right? So basically in the pre-market hours, right, of the next day, April 29th, you can see that on the 4-hour time chart, Google was having trouble breaking out of that 9-day moving average. It couldn't break above it. So with that in mind, I was like, okay, most likely it'll carry that momentum throughout the pretty much the whole day for the for Google. It's probably gonna keep going down throughout the day. And I was right. But basically for me on the 30-minute time chart, I wasn't, let's see. So basically on the 30-minute time chart, you can kind of see like it's above the 180/200-day moving average. And then at one point in the pre-market, it completely shattered the 180-day moving average. And then it was just starting to use the 200-day moving average as support. So that's where I was like, okay, let me look at it, on the 4-hour time chart. Let me see what trend is, Google in currently. Is it in an uptrend? Is it in a downtrend? So I looked at Google on the 4-hour time chart, and I was like, okay, pre-market, right? It looks like Google is having trouble breaking out of that 9-day moving average. If Google decides to open red, that's most likely a signal that Google wants to continue that continuation. It's most likely that Google wants to still continue that continuation towards the downtrend, and it most likely is going to have trouble throughout the whole day trying to get itself above that 9-day moving average for pretty much the whole day. You can kind of see that basically the 1330 candle on April 29th tried breaking above it. It completely failed. And then the 16 candle tried breaking the 9-day moving average, completely failed and got rejected by it. So pretty much my analysis was right. Basically, I want to use the, I guess you could say, try to use the 30-minute time chart to picture your entry points, and then try to use the 4-hour time chart to analyze where is that stock heading in. Is it in a downtrend? Is it an uptrend? And then from there, try to also use the moving averages. See if okay, is in the try to when the market's about to open, look at pre-market levels. Try to see if maybe for example, right, like I explained to you guys, Google was having trouble breaking out of that 9-day moving average in the pre-market, and pretty much it was probably likely that Google throughout the whole day was pretty much going to have more continuation towards the downtrend if that was the case, if it couldn't break above the 9-day moving average. So basically try to use the 30-minute time chart as entry points, sort of, in a way, and then try to analyze the trend that stock is in currently. So try to see if it's in an uptrend or in a downtrend, using the 4-hour time chart. Basically, whenever the stock is below the 9-day moving average for that particular day, or before or in pre-market hours, pretty much that kind of signals that sometimes, right, not all the times, because the market doesn't always have to go according to the technicals, but basically you're kind of using probability on your side in a way. But basically, most of the times when that particular stock is under the 9-day moving average and is having trouble breaking above that 9-day moving average in the pre-market hours, it's most likely an indicator that stock is probably going to have trouble seeing upwards momentum throughout the day. It's probably going to see more, in this case, more downwards momentum throughout the day. So pretty much try to also dollar cost average. Let's say you got into a bad spot and you're like, oh man, I'm probably going to lose a lot more money than I originally planned on to lose. No, try to dollar cost average, and once you dollar cost average a little bit, try to minimize your loss, sell out for a small 10 or 15% loss, and then move on to the next trade, and you should be good. So honestly, I think that's pretty much it. If you guys need help with the if you have any questions about trading or stocks or whatever, or about the ebook, DM me at StephenFinance1 at Instagram. And yeah, that's pretty much it. I'll see you guys in the next video. And as always, this is not financial advice. As always, take care. Bye.